All right, welcome. London Open session, Tuesday, August 18th, 2026. Here we are. And right away, we are met with a interesting little price action. Hello, Mr. Prato Potato. Prato Potato, what a cool nickname, bro. Nonetheless, we've taken the base liquidity here. We traded into this inefficiency. We couldn't quite get through it yet and turned around a little bit. Buy side taken. Now turn around. This busy completely overlapped. Alright, fair enough, my friend. Fair enough. So yeah, this bearish order block, which was bearish here and here, we trade above it. It offered a little bit of discount sensitivity, make a new high, and now, as we can see, we completely lost the ground and traded to the low of it. This BC completely closed below. And generally, Asia delivered quite a significant rally lower so far. Alright, so let's annotate our range in here where the obvious buy side, obvious sell side resides. Sell side is below this low. Buy side is above this high. This is the most pronounced range that we've got so far. We have some relative equal highs buy side liquidity here. That looks kind of smooth. We have this inefficiency also, which is kind of important, and this inefficiency too inside of this range. On the other hand, we have this BC. That was used to send price a little bit higher, and yeah, slowly but surely in a consolidated manner, we are reaching towards, I believe, this buy side liquidity pool next. Yeah, so yet recently the Asian session seems really, really, really liquid. And many times Asia offers like a really nice price runs, right? I noticed that too. Boom, there you go. You got the buy side here and the inefficiency. Just as I mentioned a while ago. God damn it, so good. Alright, so jokes aside, now let's see whether this can act as a measure of inversion for value gap. We have also this inefficiency here. Let's watch this one also. Alright, 3 a.m. started just now. Just now. Hello, Mr. To grow you. To grow you. Yeah, honestly, I would I would even like to try it, right? I would be for it, but yeah. But yeah, the I mean it's way too late where I live. Like it's literally like 2 a.m. my local time. And I usually try to sleep around that time. All right. I'm good, thank you. Thanks for asking. I hope you are too. And yeah. By the way, I have a little bit of that feeling. Maybe feeling is not the correct word, but you see this suspension block on the weekly chart? I feel like we could be gravitating into that a little bit deeper, which could allow for a little bit of bearishness this week. That's awesome, my friend. That's literally awesome. Let me find clear a clear template. So let me annotate that suspension block. All right. So this suspension block on the weekly chart is quite important because as we can see, we've taken already the previous week's high. We did it here and we rejected into the suspension block. In my mind, we can reasonably expect the price to be drawing down to the consecutive encroachment of that weekly suspension block. It doesn't mean it will do it on 1 week or one shot, but that's like a reasonable expectation, I would say, where the price could draw into. The easy target for the week, I would say, would be either this upper octane or the upper quadrant. Upper octane is the easiest. Upper octane is the easiest. Upper quadrant is still very good, but it will offer a little bit more of a range. So to be quite frankly honest, that's kind of like my weekly bias for this week, to see this 1, 2, 3 in consecutive encroachment would be the fourth level on the downside that we could potentially seek or reach, right? And yeah, I feel like that's like a reasonable idea of the weekly chart. We just tapped to the suspension block high in here, literally, and that's great. We already kind of like got to it, but I still would expect the upper octane, upper quadrant at least as a continued draw. Obviously, unless proven otherwise, but yeah, that would give me a little bit of more of a bearish stance for the price for the next couple of days, right? I might be wrong, but that's kind of how I would, or how I see it at the moment. And I'm just sharing my thought process as it is. So so yeah, with that said, the weekly bias for me potentially this week starts with a little bit of a bearish stance. So yeah, that means that the bearish setups potentially, or should be potentially, better than bullish setups. Good notes, Suyet. Good notes. By the way, where are you from, my friend? Are you from Europe or? Yeah, from Europe actually. I'm from Poland, exactly, to be exact. La Polonia. Alright, so this inefficiency in here failed to offer the inversion for Y-gap sensitivity. This busy spends a little bit more time than I would like to be spent. And this down candle here is theoretically or technically a bearish breaker. Because we had a high, slightly higher high, failed to reach this premium array, and it turned around below this breaker. Now if we can close below it, we should not see price trade outside of it after that. Alright, so now we have this bearish breaker in play. I'm 28 years old. Approaching the 30s like crazy, bro. Time flies. Alright, so now we are trading up into this breaker. Let's see if the lower half of the breaker can be reasonably respected and send price lower. The first obvious little target would be those equal lows here on the downside. Well, happy birthday to you, my friend. And then we have this inefficiency here. So yeah, I mean, this session and how I kind of want to approach this is I have a little bit or slight bearish bias for the weekly range. Still, I think we can expand a little bit lower. But taking into consideration this session right now, the Asia moved quite a bit lower, right? The Asia expanded already uh, quite significantly overnight, and now we are in London in here, right? So it's a session that's, I guess, slightly less likely to perform like another expansion or trending condition. It's rather more likely to stay inside of a range, I would say, right? That doesn't necessarily mean there will be no opportunities or anything like that, but it's more likely that the price will stay inside the range. In theory, right? So far we are delivering off of this bearish breaker. So I'm watching this inefficiency here with those equal lows as potential next draw on the downside. Did formed a little bit of a discount week here. So let's see how price will deal with that. Well, I mean, typical typical summer doldrums. Like the August is usually the worst month, summer month to trade in, right? Like seasonally, historically, that's the one of the worst months to engage with price. It's not impossible, obviously, but many times it's like that. And this is not the first year it's like this, though. Alright, so far we poked 2 times into the consecutive encroachment of this discount week and not closed below it yet. I still think we might want to gravitate towards this BC at 220 and those equal lows. That's kind of like an obvious little pool of liquidity with an efficiency linked to it, so that's like an easy draw. But yeah, so far the price is like rather being delivered with small little range candles, especially on the bodies, and there is lots of overlapping on both sides. So this candle overlaps with this candle, majority of the range of this candle. This candle overlaps with majority range of this candle. This one wasn't overlapping that much, but this one with this one, yes, and stuff like that. So yeah. Yeah, so far it's looking like it's not in a rush to go anywhere. And I respect that. Yeah, overall I like the sell side here. I like it as eventual draw on liquidity. Doesn't need to be this session, but overall for the day, I feel like this is a really like nice one. Like lots of energy, V-shape type of turnaround on a week that may see a little bit more downside. Nothing burger. So yeah, just meandering. Well, still not breaching the consecutive encroachment of this week. Still wasn't even able to close below this consecutive encroachment after getting deep down into it. Not that it won't necessarily eventually do that, but yeah, all of this is just a very slow little piece of price action that, yeah, I mean, it just doesn't necessarily fit the model. I suppose. So just now we close below the consecutive encroachment of this week. So let's see if we can expand down into this Bessie and how it does around this level. If we would go below it, I would like to see it act as bearish inversion for value gap though, and send us towards this inefficiency here. All right, so we traded down into the BC so far, staying in the upper half rather than exploring the lower half. 330. Honestly, I wouldn't be too surprised if we would do some wicked run against those equal highs here into this breaker again, based on how the price delivers so far. It's quite tricky to tell. I mean, that was left a little bit too smooth here, and this is quite kind of smooth also, but yeah, it's super small and tight inside in a range. Therefore, I wouldn't say it's unreasonable to expect that to be potentially poked. But let's see. So far, we explored down into the lower half of this BC, which suggests a potential continuation lower. And if that's the case, my next objective on the downside is this inefficiency here. and the sell liquidity below this low. This is kind of like linked together. Next level of discount that we might want to seek. And with that said, if we could close below this, this could or should act as inversion for value gap, right? So theoretically, if price would return up into it, that could frame potential one-to-one trade idea that's reasonably easy, and potential 1-2 that's a little bit more ambitious, but still doesn't require to take out this low completely. Let's change the color. And yeah, let's see if it even comes back to the inversion before reaching the sell side and or this inefficiency at all. So yeah, this would be kind of like the first target here, but how you could potentially measure that would be you would want to see how the first candle trades into it, because if the first one would close below it, then you would be more apt to hold for the lower target, right? Like the first one would be showing some rejection and stuff, then you could be more like prompt to just take the low-hanging fruit one-to-one type of objective. So yeah, we are falling short of this low for now, and we have now this inversion fair value gap with two bearish fair value gaps, which technically is like a 1-2 minute chart fair value gap. Exactly, it's like this on the 2-minute. All right, so we see the return without taking the sell side yet. That's what I would like to see actually. We are touching the low of this inversion fair value gap. And digging slightly deeper. All right, so I'm willing to let this one go and see how it closes. Okay, right away the first one closes above the consecutive encroachment, which I would technically prefer it to close below the consecutive encroachment. It doesn't necessarily mean it can go lower, but it's slightly like less ideal. I'll take that off for now and just watch and observe the price, how we doing here, because it looks like we could be having a little bit of a deeper tracement here. Maybe. This candle here traded to the low, but closed again above the consecutive encroachment. Let's watch how this one will do. Formed a busy down there also. And the power of this busy would be, in my mind, if it can stay open like this and don't trade down into it, then it's actually more powerful and or meaningful. And yeah, we still have those equal highs, right? So that's also something. Again, bodies staying in the upper half. That suggests to me that it may want to gravitate towards the buy side liquidity here and the breaker. Revisit the breaker, potentially. Let's see. Right, another close in the upper half. It's like a doji, but still. So yeah, this to me seems like it may, or yeah, may want to seek the relative equal highs up there. That would feel a little bit like an obvious level on the upside. Another close in the upper half. So ever since we traded up into this inversion fair value gap, every single candle closed in the upper half. So that's exactly the opposite what we want to see if we are bearish, right? We don't want to see that. We would like to see the bodies being closed in the lower half. That's not the case. So nice, a little measure of displacement out of the premium high of the inversion fair value gap. And that again seems quite promising at the moment. But because price already did explore the upper half here, it should never lay another body in the upper half if it's bearish. But yeah, I just don't want to guess on this one, just for the sake of guessing that it should do this or should do that. Okay, let's see. So now we close in the lower half of this, basically this fair value gap. If we could see a rally out of it into this inversion fair value gap again, I would kind of like the short, I mean the idea of being short inside this inversion into a quick continuation lower. I would kind of like that at the time. And then the lower half would or should be really, really, really nicely respected also, I would say. Well, yeah, I mean, something like this kind of makes sense in my mind. But at the same time, it starts to look a little bit too consolidated, which could mean that maybe we could take out this high or something like that. Just for the sake of doing it. All right, so also we are going into the macro 350 to 410. So I would want to watch and see how the first 1-2 candles will do inside this inversion for value gap if we can trade into it, just in case it will go for a wild spike for this short-term buy side here, which, yeah, I just don't know if it will go for that or not. Theoretically or practically, I would prefer not, and I would prefer it to just roll over, and that's what would make the most sense for me. But the session is already quite a little bit tight, I would say, which means that, you know, maybe it could go a little bit iffy. But yeah, the first candle traded into it, close below it. I like that. The next candle open up, makes a higher high, trades into it. Let's see how it will do. It barely touches consecutive encroachment here. Yeah, barely touches consecutive encroachment and closes way, way, way lower. So that's technically something I want to see. And now I'd like to see it roll over off of that and just stay inside the lower half. And this candle here couldn't trade to consequent encroachment and close even below it. So that's theoretically ideal. It should sell off here. That's nice. And now let's see if we can reach this and how. Relatively close taken. So I gotta be careful though, because it could turn around crazy against me within this environment. I'm preparing for a potential partial. Now this should act as inversion too. Okay, so it would be lovely to see a follow through rather quickly, right? Because we stepped into those equal lows, couldn't quite reach the inversion, I mean this inefficiency here yet. So it would be really lovely to just offer a more pronounced follow through that. Otherwise it becomes a little bit tricky, a little bit suspect though. So let's see, another attempt to run lower here. Let's see if it can continue. Okay, that's nice. Right, I will take a partial just for peace of mind. And trim it like this because yeah, the price action is quite sloppy in here, right? You can tell it's very smooth, right? It's a lot of shitty, messy price action, and it rejected this fair value gap on the first one here, which also is something that I didn't necessarily want to see. If it wants to follow through, it would need to overlap this week and this inefficiency on a closing basis on this candle here. So kind of like, let's just see, but yeah, technical issues, internet connection died. Sorry about that. All right, so now let's see if we can bulk up this run. Lower. All right, let's see if I can get tapped in. There we go. And the low was indeed purged as well. Fair enough, I guess. Fair enough. As for the conditions and the price action here, as it was, I feel like it was pretty okay and alright as an execution here. Let me see the result. 113 and a half added to the balance, so that's great. 49,350 even. So that's that's what it is. Still fighting with the drawdown and its recuperation. But yeah, I'm on my way. I'm on my way. No less. That was the trade. This is how it went. And yeah, it was alright. It was fine. It was fine, I guess. The price wasn't necessarily the easiest, I would say, but it wasn't the worst at the same time. So it's kind of like somewhere in the middle, I guess, which is a sweet spot. Well, nonetheless, thanks for watching though. It was a pleasure as always. I wish you guys a pleasant reminder of the day and see you next time with the next silver bullet. Bye bye.